Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, the markets, right? We've had 9 straight up weeks in a row. This is the 10th week. Can we get it to a new record high, a 10th week in a row? Now, the record of the number of weeks that the S&P 500 has gone up in a row is 13 weeks. 13 weeks. Okay, this is the 10th week, so we still could go 3 more weeks, even 4 more weeks to push this up higher and get the record. Now, the record goes back to 1957. In 1957, the S&P went up 13 weeks in a row. Now, what's interesting is usually these big run-ups, they mark the top of the market. Mark the top. So when this reverses, the odds are that the market has topped and will start to come down. We'll see when it reverses, though. Maybe we can get 15 weeks. Maybe we can get 20 weeks. We'll see how it all plays out over time, right? But what I want you to understand the most today is that we live in an inflation-driven economy. Inflation drives the economy. Now, what is the engine for the inflation? The engine would be the central bankers, right? They print the money to get the inflation rate up so that we can have positive growth in the GDP. This way, we avoid the recessions, right? That's really the number one mandate for the Fed, is to avoid a recession at any cost. Actually, that's not written down anywhere. That's just the way I see it. They will not allow a recession to happen. And the reason is they're going to inflate their way to a positive number on the GDP. See, inflation's taken into account because people pay higher prices, so that adds to the growth of the GDP, and that way we will not have a recession. You see, we'll have hyperinflation, which is very possible, but we won't get a recession. Now, they say the target is 2% for inflation. Now, why do we have a 2% target rate? There's really no reason. Wouldn't it be better if prices just stayed stable, or even if prices came down? I believe it would, but then that would cause us not to be able to count the inflation in the GDP growth, and then it's possible we'd slip into a recession. So we got to have positive inflation going forward from here. Now, we're going to get hyperinflation, but that's down the road. Now, where are we seeing hyperinflation already? Well, I would say it is on the ticket prices of the NBA Finals. The ticket prices to the NBA Finals, just to get into the house, just to get into Game 1, you got to pay a minimum of $2,000 just to get in to see the basketball game between the Spurs and the Knicks. $2,000, that's minimum. Now, if you want to sit up front, right? If you want to sit in the second row, that is $30,000 to be in the second row. Now, some people, the second row is not good enough, right? Not if you're one of those movie stars that want to be seen, or YouTube influencer. No, you're willing to pay over $40,000 for the front row in Game 1. Very interesting. Now, these prices double as the games go on. $2,000 to get into Game 1's the minimum. Now, you go out to Game 3, it goes up to $4,000. You go to Game 6, it goes to $5,250 would be the cheapest ticket you can get to get into a Game 6. Now, if it goes 7 games, I mean, that could be incredible. I mean, there could be people paying over $100,000 just to sit up front so the TV camera can see them where they're at the game. Very fascinating to me, but this would be hyperinflation in my opinion. Now, you go back 20 years, the average ticket price to get in was you could get in for under $100. But right now, minimum ticket cost, $2,000, Game 1. We'll see how these prices go as they go on to Game 7, right? Okay, so here's the thing. You want to have inflation because that drives the economy, right? So as prices go up, you drive the economy forward. Right now, it took us over 200 years as a country to get $1 trillion in debt. To get the first $1 trillion in debt, it took us 200 years. Now we do that in every 3 to 4 months. We get another trillion added on to our debt of 40 trillion, right? And you could put a number on that. Let's say you put 40 trillion times a 5% interest rate. Well, then you get $2 trillion a year just going to pay the interest. Now that would be a lot larger than the defense budget, right? The defense budget, about 1 trillion right now. We're already over that just in interest rate, 1.2 trillion. And in my opinion, this shows that the empire is crumbling when the interest expense is bigger than the defense budget. But the Donald, he wants to raise the defense budget to 1.5 trillion, but you're going to have 2 trillion on the interest rate. So you can see the empire of the United States crumbling and actually going down. Very sad. This is the country that I love. This is the country I grew up in, but I really don't recognize a lot of parts of the country right now. Now, I remember going back to the 2000s, we'd always talk about which company would be the first company to hit $1 trillion market cap. $1 trillion market cap. That was something back then, right? And it was going to be Cisco Systems, but Cisco Systems never got there. It stopped at 500 billion. Needed to double one more time, but it never got there. Okay, so anyway, so Apple Computer came along. Now, Apple Computer, it took them 42 years of being in business as Apple Computer to hit $1 trillion. Okay, and they hit the $1 trillion mark back in 2018. They hit that $1 trillion market cap. And then what's really interesting, it took them 42 years to hit the $1 trillion. How long did it take them to hit 2 trillion? Well, just 2 years longer, right? So the first trillion took 42 years. The second trillion only took 2 years. And then the third trillion came in another 2 years, right? So they're a $3 trillion company in 2022. Now today we got NVIDIA. Now NVIDIA hit $1 trillion market cap in 2023. By 2024, it was already at 3 trillion. And of course, we know today we're well over 5 trillion, going to be the first $6 trillion company. Now, my point is that the inflation is causing this to happen. The debt, the money printing that we do is causing this to blow up, right? I mean, a $5 trillion company today, probably like a 1 trillion company back in the year 2000. But with the inflation, with the printing of money, the money's got to go somewhere, right? So it goes into these companies and make them more trillions and trillions of dollars. And it makes the markets go higher and higher. But the markets really are going lower and lower and lower, as we've discussed on this channel many times. You just have to measure it in real money, right? Because gold is outpacing the markets, right? The markets are going higher and higher in nominal terms, but they're going lower and lower and lower in real terms. And that's very possible as to how this plays out. Now, the Federal Reserve, now they're willing to sacrifice the currency to save what's the bond market. What's left of the bond market? No one buys the 30-year bond anymore. They buy the 1 year or 2 year bonds, but the 30-year bonds, the only buyer for that is the Federal Reserve. But they're willing to print all the currency they can just to get the bond market to stay up, just to get the stock market to hit these record highs, just to get the real estate market to keep from crashing. We're willing to print the money, right? We're willing to inflate. And inflation, we keep going higher and higher and higher. Now, this year, I do think you're going to see, we're already at 5% on the 30-year. That will get well past 6% this year. And I think the 2 year is going to get past, well, the 10-year will get past 5%. That's just my take as to what's going to happen, right? I think these bond market, the yields are going to go higher, which is going to crush the bond market, right? We have the bond vigilantes coming back again saying that you better stop printing money because we're going to demand a lot more interest rate on the bond market. Okay, now I know inflation, their target's 2%, but I think we'll easily hit 5% this year. By their numbers, my numbers were probably already at 10%, but this is just how it's going to play out, in my opinion. See, the market is not sustainable without all this printing of money and all the currency to flood the system with to hold these prices up here at the record high. Now, we've got some interesting things going on, not just with the stock market. I mean, we got some interesting news with Bitcoin this week, right? I mean, What happened with Bitcoin this week? Oh, Michael Saylor, he's starting to sell off his Bitcoin. All right, he's going to be forced to do that later, so maybe he decides to do it voluntarily. Now, this is fascinating. His company Stretch, right, paying the 11.5% dividend, supposed to stay at 100 par level, but that's actually breaking now. Things are breaking, right? Michael Saylor, he went and paid off some of his preferred stockholders, right? They had the preferred where they could exchange it for their money back or exchange it for the stock. And since the stock's gone from 500 down to 150, no one's going to be exchanging it for the stock. So they're going to be asking for their money back. So he paid them off, right? Which used up half of his cash reserves, right? Well, don't worry. He's got the Bitcoin reserve, right? And Bitcoin's guaranteed by his own words to go up 30% a year into perpetuity, into forever land, right? 30% a year. Now, how long has Michael Saylor been buying Bitcoin? Well, he's been buying it for 6 years, right? And I mean, he's only down about $7 billion so far. That's just the start. Don't get me wrong. He's going to lose all of his $68 billion that he's invested in Bitcoin because he's going to be the cause of the collapse. When he liquidates, everything's going to collapse down. Bitcoin will drop back down below $10,000. But you see, he guarantees that goes up 30% a year. But Michael Saylor, look at, just think, this guy put $68 billion into Bitcoin and he's down $7 billion so far. Okay, that's interesting. What if he put it into silver? What if he bought silver? Oh my goodness, he would be the richest man in the world. I believe that's true. What if he put it into gold? Same thing. He'd be the richest man in the world. But he put it into Bitcoin. He's already lost $7 billion, but now he's starting to sell. But he can't get out because he's the only, there's no buyers, right? Once Michael Saylor starts to sell, who's going to be the buyer? You see, he was the market, right? He was the one bidding the Bitcoin up higher and higher and higher. So we've seen the top, right? The top was 126,000. I don't think 60,000 is going to hold on the bottom, especially if Michael Saylor keeps selling off his Bitcoin like he started to do. You see, what he's saying now is, now he's actually getting a little smart here. He's saying that it's best to sell some of the Bitcoin off because he can buy it back at a lower price in the future. So he's trying to game the market now by selling his Bitcoin. Why else would he sell? If he thought it was really going up 30% a year, he wouldn't be a seller, but he knows it's coming down. So he wants to get out some, and maybe he buys it back lower, and maybe he gets a bounce, so maybe he can become a Bitcoin trading company, right? I mean, he's a Bitcoin treasury. He's invented all this digital credit, digital equity. He's invented all these new things. Maybe he can be the first Bitcoin trading company where he jumps in and jumps out of the Bitcoin, right? I mean, he's already starting to sell them off, and then he's waiting for the price to come down so he can buy back in. But you got to watch that Stretch price. He's guaranteeing 11.5% to people, but it's starting to break. It's not holding the 100 par, which means it's actually paying more, which I guess is good if you're actually going to get paid. But I don't think you're actually going to get paid. But as it comes down below par, the rate goes up to 13%, 15% as it keeps dropping. Well, heck, you'll be making well over the 30% that he's saying Bitcoin's going to go up every year. I think he's in a lot of trouble. I think he knows it. Bought off his preferred stockholders because he knew they were going to ask for their money back. Sold some of his Bitcoin because he knows he's going to be forced to sell it eventually. And his poor company Stretch, it's not holding the par level. We'll see how this all plays out over time, but I think it's coming to a head where you're going to start to see the crash coming in the Bitcoin market. We'll just see how that plays out. Anyways, if you like this stuff, that's all I really got today. Give me the thumbs up, punch the subscribe button, get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.